All right, welcome everybody to the client support webinar for September 13th, 2023. Great to have everybody here. Okay, let me make sure you can hear me okay. And I think we're good to go there. And let me just run through my administrational items. Hey, before I get going, Jean, anything you want to add in today?
Well, welcome everybody. And I do see Jim Blue here. I know, Jim, you've got a question. So looks like Jim's saying howdy so he can hear us. And welcome everybody else as well. And I guess just carry on.
Carry on, will do. Jim, I'll get to your question. I have it in front of me here. So give me a second. I just got to go through the admin stuff. All right, so let me just run through this stuff real quickly. First thing I talk about are the risks involved in trading. There are risks. We work in a realm of probabilities, not guarantees. Past performance does not guarantee future performance, and so you need to know that. Therefore, you need to trade with risk capital, money you can afford to risk in the markets, and also know how to do your trade size. And also, too, on the things we cover today, whatever it is, make sure you run any of these ideas you're thinking about implementing past your financial advisor or whoever manages your money to be sure they're suitable for you. We don't know your personal situation, and of course they do. We do have books available on money management, which can help you learn how to control your risk on each and every trade. And my newest book, The Art of Trading, second edition. Really excited about this book. It's going to be my best book. A lot of new information, a lot of information also about our new software in there, as well as some upgrades on how to use the art software. And super. All right, so you can order that on as a pre-order on our Amazon page, and you can get that right directly from our website. So keep that in mind. And also, too, next, we're going to be using a lot of software that we, of course, I basically created this software over the last 30 years of trading the financial markets. We have charting software, we have scanners, all sorts of good things. And the idea behind this software here, of course, is for you to control your risk, know your entries, and know how to scan the various markets. All right, so let me get out of this. Jim, let me first, give me 1 second. I'll just exit out of that by escaping. All right, so here's TradeStation. For those of you using TradeStation, I've got NinjaTrader right behind it. All right, so Jim, I was looking over the message you were getting on NinjaTrader. First thing I want you to do is on the chart you have open, let's check how much data you have. You have to have at least 600 bars, okay? Whether you've got it days back or number of bars, you have to have at least 600 or you're going to get a message like you got that you don't have enough bars. So check that first. Maybe you opened up a new chart and it didn't have enough history on it, or you lowered the history, but that's the first place I want you to check, okay? So definitely check that. All right, and then we'll see what happens. Because it looks to me like it says out of range bars ago. Okay, so I'm not sure if it's on the actual chart itself. And then if not, we'll check each individual ribbon as well. So we go into indicators. All right, looks like on the area you sent me, it was a TLM if I'm not mistaken. And you've got two, you got the ribbon and here. Okay, so just make sure bars back is set to 600 and you have at least 600 bars on your chart. See if that doesn't fix you up, okay? And then let me know. Anybody else? Anybody else have any issues at all going on? Let me know if you do. This is the place to handle it. All right, so I'm getting a question on the art reversal bars. How do they work? Okay, so I think the best way for me to answer that is to actually draw you a situation on how they form. And so, you know, they form on uptrends and downtrends. So I'll do an uptrend first. So let's say you have price bars going up like you do. All right, and when you think of an art reversal, I want you to think of it as a pivot point, but a special kind of pivot point. it's a very, we put a lot of effort and work into this to make sure that when these form, they have a high probability of giving you a movement of at least 2 to 3 price bars minimum, okay, in the direction of whatever it's indicating. And then I'm going to show you some tricks on how to use it for even more. All right, so when you have a move up like this, all right, there's a certain amount of momentum that goes into the move, kind of like, you know, when we do the pyramids. All right, and also the price bars have certain structures. So when you get to a pivot point and it reverses, all right, we take a look at the structure that went in to forming this movement as well as the individual price bar. Okay, so that's one thing you need to know when we look at that. So if we look at this movement up here like this, all right, the next thing we look at not only is the movement, does the price bars have higher highs and higher lows? We're looking at a lot of different things. So we also look at the volume when it's present. Now, not all markets have volume, all right? For example, forex doesn't report volume, okay? But most markets have it, but not all. So when it's not available, the system doesn't access that part of the calculation that we take into account. So when you have a movement up like this, and you get a pivot point here, or a potential pivot point forming, we look at this price bar. And we're looking at them on every price bar. So if this was up, okay, and then we got here and it took out the high, then we focus on whatever the most recent highest high price bar in the formation we're looking at. And then we look at, is this a bullish or bearish price bar? And if it's bearish, okay, then this has the potential, provided the volume and the momentum calcs and the structure of the price bar all make sense. It will label this as a 1B. And usually put a little circle or something up there, depending on what the platform allows that we program on. All right, so let me draw that 1B a little better for you up here. It wasn't too good. All right, 1B. Okay, so, and this will be, when you see one up here, this one will be in red, okay? Because it's technically a bearish 1B, because what we're looking for when this forms is if prices break below the low of this, then that's bearish. All right, that's what makes it a pivot point at that point. Market rolls over, right? So that's kind of important. All right, and it's usually good, like I say, 2 to 3 and sometimes 5 price bars in the direction. So why is that important? Well, you may want to, you know, you may have a pyramid far away, and this may be an area where you could scale out, take a little profit off it, for one thing, if you're trend trading along with them. It may sometimes pivot points, but not always, form at either the tops or bottoms of major trends. So if you're looking at the Elliott wave and you think this is a wave 5 top, and you've got a pivot here, and it makes sense with the Elliott wave count, well then that may be even a more significant pivot point, right? So you kind of take a look at that. Also too, pivot points that are longer, more elongated. All right, when we're talking about pivot point, we're meaning one price bar sitting at the top that actually makes the pivot, right? So if that's elongated, longer than normal, that's also more powerful simply because it means that you had more people driving the price up and down at greater distances. So you're really having a very intense fight between the bulls and the bears, okay? And actually how that resides is really important. So if it ends up being a bearish price bar, like in this price bar here, then that's bearish. And that is what makes it a 1B or reversal, okay? Now, if this price bar was not bearish, but instead another bullish price bar like that, well, that's not going to be a 1B because you cannot have a bearish 1B on a bullish price bar. Let that sink in for a minute. So you got to have a bearish price bar. And that leads us to our next thing to talk about. What is a bearish price bar? Well, if you open up any charting platform, basically they're going to show you, and it doesn't matter if you use candlesticks or if you use open, high, and low and close. It really doesn't matter because the candlesticks will capture the open and the close, and the wicks will capture the distance. So a lot of people use our software even when they're candlestick trading, okay? So in a case like this, what our system does, however, is it takes a look at where the open versus where the close is. And you know, every charting platform out there that labels a bullish and bearish price bar does that. But what they do is they took a look at where the opening is versus where the close is. And if the close is right here, as long as it's above the open, most charting platforms are going to say that is a bull price bar, right? Now, for us, we don't do it that way. So let's take the same price bar, and if we have the open here and we have the close here, we're going to label this a bearish one. You're like, holy cow, why are you doing that, Ben? All right. Because what we do is, and you got to think about the logic behind it. So what we do is we take a look and we kind of see where the halfway mark is on the price bar. And that's going to be right about here, okay? So if you think of the struggle between the bulls and the bears, somebody had to drive it way up here, right? But notice as the price bar ended, somebody had to drive it way down here. So who was really in control at the end of the price bar? The bears. And so we make that determination if the price bar closes on the upper 50% of the price bar itself, the length, the distance between the high and the low, then we classify that as bullish. If it closes on the lower half, then we're saying the bears are in control, so we classify that as bearish. Any questions on that? Any questions? Does that make sense to you? It's a big difference because a lot of times, you know, we have something, and it's part of the art software that does this. It's called the art color bars. All right, art color bars. And the art color bars really is what is doing this, right? I'll just say call bars for short, okay? So that's really classifying. Now, the reason why this is important is because going back to our reversals, our pivot points, when you move up and you have a price bar that looks like this, where the close is slightly above the open, and you're expecting that to be a bearish price bar, our system's going to label this as, or you're expecting this to be a bullish price bar, it's going to be, this is going to be a bearish one because it closed below the 50% mark, and you'll see a 1B up here, a bearish one, okay? And it's vice versa for a downtrend, okay? So you can have a downtrend too and have the exact situation, okay, here, where you can have this and this. If this does this, then that's bearish. You're not going to get a 1B here, right? Because that's a bearish price bar, according to the way we do it. However, if you have a situation here, all right, where you have this and this, then yes, that's going to be a bullish 1B. Now, hopefully that's clear, okay? So that's important to note. Now, one more thing, Frank, I'll answer your question in a minute. One more thing I want to make clear, and I'm going to erase this, is when you see a 1B with a dot on it like this, this is a signal bar only. This is not a call to action bar yet. It's a signal bar. So when you have something like this, okay, and it's a bearish price bar, then you don't just automatically go short. It becomes the signal bar. And what does that mean? Well, what that means is that we then see how prices respond after this bar forms. So for example, if you have a price bar that goes below it, well, then there is the trigger, Okay, that's confirmed, okay, at that point. However, if you have a situation where instead of going below it, it goes above it, then this will go away. This will void out, okay? May turn gray on your system, however you have it labeled, okay? And then it keeps looking for the next possible 1B after that. All right, so it has to break below the low if it's a bearish one. Opposite, remember, opposite if it's a bullish one, okay? So it becomes a signal bar. That's really important. And when you go, let me just erase it. So when you go, let's say you have something like this, okay, and you go short here, boom. Well, this, well, my drawing's not very good, is it? All right, this should be more straight. All right, so this is the signal bar. This is your 1B, right? And we go short and prices go right under it, right? And then what happens with this is that this becomes your stop. So if you're going to take a quick scalp or anything, then this is where your stop comes. Now, keep that in mind for a moment, okay? Now I want to talk about the 2B for a minute. 2B. So we have two types of reversal pivot points, the 2B and the 1B. The reason for the 2B is, let's say you have your market moving up, and again, same thing for bearishness too, but this is going to be bearish and bullish. So it depends if the slope is up or down, right? So let's say this goes up here. This is a bullish price bar. So it can't be a 1B, right? But let's say on the next price bar, it's down here like this, bearish one. Okay, this then will be labeled as a 2B. Now, why 2? Why don't we just call this a new 1B? Well, a couple reasons. One is the high for a 1B has to be higher than the previous price bar. In this case, this price bar, which is the signal bar, all right, is lower than the previous price bar, but it is bearish, okay? It has to be bearish if it's going to be a bearish 2B. It has to be bullish if it's going to be a bullish 2B. Now, the high can also be the same height as the first price bar, okay? That can happen too. That would still be a 2B, all right? As long as it's not higher, it becomes a 2B instead of a 1B. Now, here's a couple things. So why do we bother even calling it a 2B? Why don't you just call it a reversal? Well, the reason for it is, again, is this is the signal bar. So if prices go below this, then you can take an entry or you can scale out of a long position, whatever. And the entry obviously would be the short side. But here's the difference. This is the first price bar. This is the second price bar. The reason we call this a 2B is we actually need both of these price bars because the high on the first price bar, all right, becomes our stop. And that's, if you think about it, you know, if you're going to take a pivot point trade, don't you want your high at the top? Of course you do. All right, of course you do. And there's many types of 2Bs, okay? You can get some that form up here, okay? Remember, bullish. And maybe you'll get an inside price bar, something like this that could form, right? So then this would be your entry, okay? So, and this would still be a 2B, even though it looks different than the other example I showed you. Does that make sense? So when you think of art reversals, what I want you to think of is not only this type of patterns we're talking about with the 1B and the 2B, but you got to remember that the whole 1B and 2B relies on the proper coloring of the price bar by the art color bars. So that's built into the calculation. That's important. Okay, so that is a key thing. All right, Frank, how are you? If you use pivot indicator, do you use standard pivots or fib pivots? It's actually a proprietary design that I created based off testing. Did it about, I don't know how long ago now, 20 some odd years ago. The art software hasn't changed, at all since I first came out with it. It's been 20 years now since we first programmed it. Even longer since I actually used it, because I used to do it on paper before programming was really a thing. But statistically, this kind of way of doing it is proprietary because we're looking at the momentum and at times volume, if it's present, going into the formation of these pivots. So it's not really standard, or it's not really a fib pivot. It's just a change in behavior that can happen even during normal profit taking or during significant changes in trend or Elliott wave at the end of the Elliott wave, or in some of the minor waves inside the master Elliott waves. All right, it's just a pivot point, so that's kind of important. And you'll see them on the chart here, here, all over, okay? So that's kind of cool. Now, one other thing I want to show you, all right? Okay, so what I want to show you here, it could at times line up with that. It just depends on what the momentum and the volume, if the volume is present in calculating that, okay? All right, now, one little key tip I wanted to show you. So granted, how can pivots be used? All right, they can be used in a variety of ways, the art reversals, all right? Let's say, and I'm just gonna draw lines here. Let's say we go up in a market, we get in, this is a pyramid. So we're trend trading, we get in here, okay? The market gets really hyperbolic. If you draw the trend line, it would be something like this. So this distance really far apart from where it should be. So you're gonna probably get a pullback, right? But you got the darn pyramid here and it hasn't pulled back any for a new pyramid to form. Okay, so what do? Well, if you get a 1B or a 2B up here, okay, it's a great place to scale out. You may not want to leave the position because you may get pulled back here and then it goes further, we get another pyramid here, and then you trail your stop up, right? But it gives you an area where you can pull out some contracts or shares, depending if you're trading futures or stocks or whatever you're trading, and lets you breathe a little easier and weather the pullback. So it can be a form of scaling out, all right? Sometimes you get them down in here. This could be a bullish one, and you could use it for scaling in, okay? That's another way you could use it. So scaling out is not the only method. It could be used for scaling in, depending on how you want to do it. So that is a way you can use 1Bs and 2Bs with trend trading. Now, if you're going to use them for scalping, here's what I would suggest. Now, for scalping the market, there's a couple ways you could do it. One is if you would scalp only in the direction of the trend. Let's say you get a pyramid here, okay, and you go long and you get a 1B here, and you just want to scalp that, you could do it. Get out of all your positions, okay? You can get out of everything, okay? And maybe it'll sell off, maybe it'll go back up, but the purpose of this trade was a quick scalp. So that is a possibility, all right? Maybe you're trading a really short time frame and you don't like to hold positions that long. Okay, you can scalp out that way. Another way to use it is, 35% of the time markets trend, the other 65, they're going back and forth. Well, if you can find a channel that's kind of going like this, and you draw an upper resistance line and a lower support line, and you get 1Bs here and down here, you get the opposite ones, and you can just trade in between them. Short, turn around, go long. Now, here's my tip. If the 1B or 2B, the actual pivot, occurs right near the top or right near the bottom, those you can act on. If they form in the middle, I don't do anything with them, okay? So what I'm looking for is for the market to reach the extreme areas inside the channel before actually using them. Because if I do that, then I have a better chance to get back up here. But if I enter here, then I'm limited but to my potential profit, and it may not make it worth it, right? And don't forget, when you're trading these channels like this, back and forth, as soon as it breaks either up here or if it broke down here, as soon as that happens, all right, you can stay with the pivot as long as it's active and get out on the next one. But now, once it breaks out of the channel, you should be thinking trend trade, right? Because it's no longer channeling. So I'm glad you asked me about this, because this is an area that I think is really good to talk about, because we spend a lot of time talking about the pyramids and not much time talking about the 1Bs and 2Bs, but they really are important and can be integrated really well into your trading plan at certain times. So it's kind of good to have that tool in your toolbox. Any questions on that? Oh, thanks, Frank. Thank you very much. Anybody else have anything there? Jim, did you get a chance to play around with your settings on bars back? Let me know how you make out on that. Frank, hopefully I answered all your questions regarding standard pivots. Okay, good. If you have a lot of charts open, you'll have to find out which chart is triggering that. I'm looking at your email with a message on it now, and I don't think it tells you what chart it is. I think it just tells you it's a problem with the bars back. All right, so let's see. Frank's saying acting on 1B and 2B in smaller time frames is hard. It is if you're going to scalp, for sure. Okay, you do have to have a wide enough channel, right, Frank, in order to make that worthwhile. And that even goes, you know, if you're on a daily chart and the channel's not that wide, sometimes you get narrow even on a daily, then it's probably not going to make sense. But it will make more sense if you are very critical on which 1Bs and 2Bs to take. So wait for them to get right near the edge and take those, and try to not take the ones in here, okay, in the middle. That will help. And of course, you know, you never know when a channel will end. So if you're caught going the wrong direction for whatever reason, you'll have to exit as soon as it breaks the channel. But you know, you should be actually probably, in other words, here's what I'm saying with that. If you've got this going here, and let's say it breaks out here, well, chances are, okay, if you went short here, you're going to get another pivot here, so you'd probably be going in the right direction. But you know, there could come that time, because nothing's guaranteed, where you could be still short. We don't get a pivot here, and if it bounces up here, you're going to be out even if it goes above the exit, though. So you're not going to get burned being short when it breaks out of the channel, because you'll have a stop based on the pivot that formed. Remember, if it's a 1B, we put our stop on the other side of the 1B signal bar, and if it's a 2B, it goes on top of the first bar of the 2B. So either way, you're not going to get burned. And you should still do your trade size. You should still calculate your trade size on each one. That way, if things don't work out on that trade, you don't lose, you're sure you only lose a small percentage based on what you calculate. So, you know, that should be the same. Cool. All right, anybody else? Anything else cooking out there? Oh, good question. What if the arc color bar is not colored inside? Okay, so there's sometimes, okay, this depends on the background you're using for charts. Let me just go back to my charts and see if I can find one here. If you get a neutral price bar, because I didn't cover that, did I? Okay, if you get a neutral price bar, I'm trying to see if I have one. All right, so I'll bring up the whiteboard again. If you get a price bar that's neutral, neutral is this, okay? The open equals the close, okay? And it happens right on the 50% mark. Now, if you get this, that's bullish because it closed on the upper half. But if this equals the 50% mark, that's a neutral price bar. That's why you're not gonna see that many of those, all right? Because it has to be right at the center. So if you get that, the system, I think by default colors it black, but if you're using a black charting background, you may not see it. So you gotta make sure you go into the settings window and change the color of the neutrals or voided ones to the color that you can see on your charting background, okay? So that would be the only reason you miss it or don't see it at all. Good question. Make sense? Okay, good. All right, well, as usual, you guys and gals out there are great. Good turnout today. I guess everybody's back from doing their summer activities, right? Everybody's back in the motion of making money. So that's what we got. That's what the fall is for, making money so we get to the holidays, right? But thank you. Great session, great questions. Wonderful to have everybody here. And James, hopefully that will solve your problem. Keep us advised, okay? You can let support know. Oh, my pleasure. That should solve the problem, okay? Gold and crude oil. Okay, so let's jump in. I'll finish up on this. So USO and gold. Let's take a look at USO. As you know, I'm bullish on oil, have been for quite some time. Had a little bit of a rough start getting into this because, you know, it pulled down. This was a 3, okay? And it pulled down. I thought the 4 was in here. Went long, got stopped out. Okay, so I tried again. Got another pyramid, went long, got stopped out. All right, so now I'm getting like, okay, come on already, all right? 3 times is a charm. So now did it again, okay? This is where it works, okay? So sometimes when you're looking at these bottoms, and this was all in the target range, so they were okay to take, but sometimes, you know, markets aren't always nice to us, are they? Even though when we do everything right. So you gotta keep at it. If you really feel your analysis is correct and you just are getting hit off the bottom a few times, stay with it, okay? And that's what we're doing here. And my projection for oil is between 100 and 126. We're at 79 now. Unfortunately, this is going to have extreme ramifications for the market and our economy. You're going to have higher prices at the gas, which is going to squeeze the consumers even further than the higher interest rates are at this time on their credit cards. So more squeeze. The other problem is businesses, when energy goes up, business profits go down, okay? And they usually start laying people off. So that does not bode well for our fragile economy that we're in right now. So that's kind of where I'm looking at it. I think it's going to move up there. Now it'll pull back again and it will zigzag, but it should get up to those levels over the next year, I think. Okay, so that's kind of, we're bullish on oil, we're long on it and recommended it in our more reports and everything. So hopefully you guys we're able to get in that provide, subscribe to that service. But it's looking good now. Okay, don't keep your stop too close. Okay, just keep at it. All right. Okay. Yeah, WTI, right? Let me see what I can get on that one. Actually, WTI is interesting because on this one here, it's not bullish. Okay, not bullish on WTI here, unless I typed that in wrong. Kind of, I'll tell you though, it's got some more bottoming to do here. It's not quite done, but when it's done, it'll be good. All right, and then that brings us to gold. Okay, another one, Frank, you wanted to look at, right? Okay, all right. So, okay, crude oil, that's a different ballgame. Okay, we actually day trade the crude oil. Anybody here from our day trading room? We'll take a look. Let's take a look before we go on crude on the futures contract for that. All right, so here's gold. All right, I'm going to open up the long-term chart on gold and just run you through what I think on this bad boy. All right, so we had a situation of a wave 3 top here. Okay, this is back in 2011. All right, go all the way down here. Then we had a long wave 4. Then we had a bottom put in, and then we had this nonsense before it started to move into wave 5. Okay, so there's wave 5. Now, we're kind of in the target range for wave 5 already, simply because we're above the high. I think it's probably, it's probably going a little bit higher, maybe around around 200 to 210 before it's all over. We got a green PTF sitting on the long-term chart here. So even though we hit the target here, this kind of kept us in, right? And so this thing has a 75% accuracy rate, which is pretty good. But you do have to suffer through a pullback if the pullback is going to come before it's right? So that happens. But in any case, gold's not done. All right, it's got some more room to the upside. And we can, we had this little pullback here that we were looking for, okay, and then it took off again and made another high. So we kind of got that going on. We don't really, at this time have bearish divergence because that's no divergence there. So I'm thinking a little more bullishness on gold. But I got to tell you, if the market sells off big time, yes, money will flow into gold because that's usually a safe haven. But I think the cryptos are going to come in and steal some of that inflow that would normally go into gold. So I think, the cryptos are just coming off a major bottom and have a lot more room to move than gold, honestly. So we'll see how that all works out. But I do think cryptos kind of remind me right now of back in the year 2000 when you had the .com bubble. And everything fell apart, kind of like what happened with cryptos after it reached the top. And then out of the ashes came the Yahoos, the Googles, the Amazons, and the future of the internet as we know it, and the future of .coms. So I don't think Bitcoin is done. I don't think cryptos are done. There's a lot of them out there. I think a lot of them have gone south. And out of the ashes will rise the ones that carry us forward. It'll be interesting to see what happens with that, simply because, the thing about Bitcoin, which was so good, is that it kept the prying eyes of the government out of your business. But they kind of, wherever there is some type of an electronic footprint, they can track you somehow. And I wouldn't put it past them to regulate that so they can make sure they can track it. And so that's Bitcoin's still unraveling. The future of Bitcoin and the way it will take shape, I think, is still unraveling. But in any case, I think there is an opportunity to make a long story short on that. Okay. All right, so if we go to the futures market, I think I got my real-time futures ticking away here. Let's see, maybe not. Maybe I don't have that. Yeah, they're on. Okay, they're on. Okay, so let's go to crude oil. Anybody in the day trading room out there? Okay, because we do trade the crude oil. You can see it moving down right now. Day trading room's a lot of fun. If you guys got the time during the day to do that, join us. We have a good time in there. It's like a family in there. All right. So there you have that. All right. So let's just see what else here. I think that's pretty much it. I've gone a little over, but good stuff today. All right. Good stuff today. Great to have everybody here. All right. So we recorded this. It will be put in our YouTube channel. Make sure you join us on YouTube every Friday, by the way. You know, we have Stock Analysis Friday at 8 a.m. Pacific time here. And basically, it's almost like a stock picking service. We have enough people there that everybody brings their favorite picks or ones they're considering. We look at it, and we usually find quite a few that you may not have been aware of. So it turns almost into a stock picking service, which is a lot of fun. Okay, so pretty cool stuff. All right, and that's Friday. So that is it for that. And again, the recording will be placed on our YouTube page, but to access that, you have to go through the Customer Hub portal because they are unlisted. Our client recordings, I keep private amongst us. So I unlist them. So they're only available if you go in using the correct link for our clients. And that's in the client portal. Okay, so we're kind of, that's kind of important to know that. All right, my pleasure. Okay, Frank, my pleasure. Good to have you here. All right, everybody, we'll see you next week, okay? Have a good one, and thanks so much. Great questions and great participation. Take care, everybody. Thank you.